Hi guys, and welcome back to my channel. It's Carrie the Chemist here. So today I am going to be talking about money, and especially about credit score, credit report, and how that affects our life, everyday life. Like if you want to get a loan, if you want to get a mortgage, you know that this is important. So I'm reviewing this today because I know that a credit score and credit history has a very big impact on our financial situation. So a lot of us who are from the Caribbean, who are from Jamaica, we are not accustomed to credit history. Well, when I was in Jamaica, I wasn't aware of a credit history, so I don't know about right now, but I know that a lot of people move from Jamaica or from the Caribbean and then they come to the US or to Canada, and we are kind of bombarded with all the access to credit cards and to just different loans, and we do not realize the impact that a credit score has on our ability to get good credit and to get to manage our money is important, because all of these will impact our credit score. So financial institutions like banks or different places will need your credit score. So they look at your credit report, they look at your credit score, and then they decide if they will lend you money, and it also determines how much interest you will pay on a loan if they lend you any money. So when you take out a credit card, that's one. If you're renting an apartment or taking out a mortgage, if you're doing a car loan, all these companies, they look at your credit report and then they see how good you are at paying back your loans, and then they will determine how much interest they will charge you. So if your credit is good, you get lower interest rates on your loans, and if your credit is poor, then you will end up paying a significant interest rate on your loans. So that's why it's important to have a good credit score. So that's just a brief explanation of why you need to have a good credit score. So if you want to understand credit score some more, it's a number that can range from as low as 300 and it can go up to 900. So if someone has a credit score of 300 to, let's say, 500, that's a very poor credit score, and it is difficult to get a loan, and the interest rates are usually pretty high, can be as much as 50%. Yes, shocking. If you're looking at a credit score that is 560 to, let's say, 600 or 660, that is considered poor, and you will be eligible for secured products, and your interest rates are usually 30%. For a fair credit score, we're looking at 660 to 724. So this is, you're aiming to be in the 600, 700. Well, not 600, maybe 660. 700 is a great target. So you'll be approved for credit, and your interests are usually below 20%. So an average Canadian, they said, had like 660 as their credit score, 650 as their credit score. So you would fall in a poor credit rating if you're an average Canadian. So you're aiming to be at 700, and that is considered fair, and interest rates are usually below 20%. So that's what you're aiming to be. And to get an excellent credit score, you want to be 900. So that's just eye-opening information for people who don't understand what a credit score is. So it's your score that tells creditors how much interest they would want to charge you, and if you're good at paying back your debts. Okay, so now we're going to look at how we can improve our credit score. So we know what a credit score is, we know what numbers we're working with and what we want to aim for. So now, how do you improve your credit score? So there are two national credit bureaus in Canada, and they're Equifax and TransUnion. And you can request a credit report via the mail, and that one is usually free. But if you want something more immediate online, then you would have to pay a small fee to get this. So it's good to have this information to know what your credit score is. So you can request one, and I said it can be free. If you request it via mail, that would be a slower process, but at least you would know what your numbers are. Then you need to interpret your scores, and we have already gone over those. So there are 4 categories according to Equifax. There is poor, average, good, or excellent. So if you're under 500, if your credit score is under 500, that is considered poor. If you're at 650, you're an average. And if you're over 760 in your score, then that's excellent. And you would qualify for most loans, and you would get great interest if your credit score is 700 or more. So let's just talk about some of the steps that we can do to improve our credit. Okay. So we have checked our credit score, we have interpreted what the number means, and now we just want to make sure that there are no errors on our credit report. So you want to make sure that all the report there are correct, they are related to you, they're not somebody else's information. If there are any errors on there, you can contact the credit bureau, and there's a form that you will fill out, and they will make the corrections if that's the case. You want your history to be old and have a good report over years, maybe 5 years or more. So for people who are just coming to Canada, I recommend getting, like, you can get a secure credit card, because you have to use credit in order to improve your credit score, and use it responsibly. So if you go into like a MoneyGram and request a secure credit card, they will give you a credit card, and what you do is put money onto the credit card. So let's say you want to put $100 on the card, then you know exactly how much money is available to you to spend. So you're essentially using your money, so it's easier to manage, and that's just one way of starting your credit. If you're not able to get one of those other credit cards at the beginning of your journey to improving your credit score, you can get a secured credit card. So that was one of the things that I did when I just moved here. I got a secured credit card, I put money on it, and then I used it responsibly. Okay. Your payment history accounts for 35% of your credit score. So your credit report will show if you're missing payments, if you're doing late payments, and this accounts for 35% of your score. So it's important to pay your bills. Don't try and avoid late payments, people. Try not to miss payments, and this will impact your credit score. So any debts that you have that are fixed payments, try to automate them. So things like your car note, things like your rent, your mortgage, student loans, anything that is, you know, that every month this is going to be coming up, just automatically go into your bank, say this is my pay goes in on day 20, and these are the bills that I want to come out of my account automatically, and they can set it up for you. And if you're tech savvy, you can go onto the computer, go into your bank online banking, and set up these things on your computer so that they're automatically done. You don't have to be thinking about it. So your pay goes in, these bills go out. So every month you can go in there and see that everything is automated and you don't have to worry about it. And this will significantly improve your credit score because you're paying your bills on time. Okay, let's talk about credit check. So when you apply for a credit card, these lenders will ask the credit bureau for your credit report, and these are considered hard credit or hard hits. So there are two types of credit checks. There is hard hit and soft hit. So when, as I said before, if you apply for a credit card, they will request your credit report from the bureau, and this is considered a hard hit. So some of the examples of hard hits are credit card application. If you're doing rental application for, suppose you're renting an apartment, if you're applying for a mortgage, these are hard hit. So you want to limit the number of credit checks, that especially the hard hit ones. Okay, so if you get code from lenders within a 2-week period when shopping around for like a car or a mortgage, then your inquiries will be combined and treated as a single inquiry for your credit score. So you want to do them in a maybe 2 weeks period, but you want to limit these numbers of hard checks because they will reflect that you're not able to manage your money, or that you are taking on more than you can manage. So it's one of those things that you need to be mindful of. Soft hits are usually credit checks that appear in your credit in your credit score, credit report, and only you can see them, and they don't affect your credit score. So if you request a credit report, suppose you request it from them, then that would be a soft hit, and that's not such a big one. But the hard hits, those are the ones that you have to be mindful of, and don't request like a ton of credit cards because these applications will be considered a hard hit. Okay, so it's another point is to use different type of credits. So if you have a mixture of credits, so if you have credit cards, if you have your car loan, your line of credit, your mortgages, these are different types of loans, and it's good to have like a diverse loan diverse types of loan on your credit report. Okay, so those are just some of the things, guys, that you need to think about when you're applying for credit, when you're getting credit cards, because a lot of us get so overwhelmed with, well, we have a credit card and we just spend and spend and spend, but we're not thinking about how it's going to impact our credit score. And it's a vicious cycle. You need to use credit in order to build your credit score. But if you don't manage your credit well, then you will have a very poor credit score, and that will cost you more money in the end. So take a few minutes to watch this video and just take control of your credit and spending, and work toward improving your credit score. That's one of your like resolutions that you should be having on in 2021. Make it one of your resolutions to improve your credit score this year. Okay guys, thank you for watching. Bye.